Our next lecture is on property insurance, commercial property insurance, technically known as commercial lines. Under a typical commercial insurance policy, the risks covered are the following. Let us look at a standard fire policy. Typically, a standard fire policy will include 3 levels of cover: fire, lightning, and domestic explosion. There are different types of perils that need to be covered under commercial insurance: chemical, social, natural, and miscellaneous perils. Typical special perils include explosion, aircraft or aerial devices, riot, civil commotion, malicious damage, earthquake, subterranean fire, spontaneous fermentation or heating. If these occur and cause damage, destruction or loss to the property being insured, then insurance coverage will apply. More perils: storm, flood, escape of water, impact damage, sprinkler leakage, subsidence, ground wave, and landslip are typical property perils. These are typical general exclusions found under a commercial property policy. Some may be insured under a specific policy, such as marine or consequential loss. Others are buybacks, such as riot and civil commotion. Other are market exclusions, which means that no insurance company will cover such perils. Commercial policies may be insured on an all risks basis, which is a wider cover when compared to fire and special perils. An all risks policy is one which covers any accidental loss, not limited to a specified peril, and therefore if the property insured is lost, damaged or destructed by any accidental cause, then that will be covered by the policy. Of course, subject that this cause is not specifically excluded by the policy under the exclusions section. Commercial property insurance has some limitations. As we said before, some exclusions are absolute, which means they cannot be bought back. Some may be considered by an underwriter, but of course these may carry additional premium or special underwriting consideration. Others may be inserted in the policy. However, they will have a warranty or a condition endorsed. Other property risks are more specifically insured by a more appropriate policy. Theft is also a particular peril which is considered under a property policy. The Theft Act specifically says that any misappropriation of property is deemed to be considered as theft. This, of course, is a wide definition which the insurers opted to limit by inserting special particular clauses, such as the ones requiring forcible and violent entry to or exit from the premises. This means that the policy requires evidence that force or violence was used to gain access into or out of the premises. These are some extensions under a typical commercial property policy, some being given automatically and some requiring additional premium. Glass insurance is based on all risks covered. That means any accidental breakage of glass, of fixed glass, is covered, provided that this is not excluded. Money is insured on an all risks basis, and it is covered on the premises, in transit, in the private residence of the insured, and in safes or strong-rooms. These are some extensions under a money policy.